Another important event today was a vote by Tesla shareholders to reinstate CEO Elon Musk's controversial $56 billion pay deal and change the state where the electric car company is incorporated to Texas. Tesla shares went up about 3% before the news came out today. They went up another point or so after the market closed. People who support the pay deal say Musk deserves it because he's important to Tesla's future and should be paid enough. For Tesla, making hardware is only one part of what it does. In general, car companies are not tech companies, so this is a big deal. I think we can more than 10 times the value of the company just by making vehicles self-driving. It's even more exciting to think about the Optimus robot, a humanoid robot that can be your friend, help you around the house, watch your kids, or work in the workplace. The real question is how many super useful helper droids that look like people would you want? Everyone wants a C-3PO. I believe everyone will need one. A lot of them could be sold for $20,000. If they do, Tesla could make about $1 trillion a year from that. We're going to talk about Tesla's really exciting week, which was full of strategy changes, legal developments, and interesting conversations that could have a big effect on the stock price of the company. Tesla is on the cutting edge of big changes, from Elon Musk's possible new pay plans to the important role AI will play in shaping how people connect with each other in the future. We'll talk about the specifics of Tesla's move to Texas, the excitement around new stock highs, and the ongoing argument about AI's abilities versus human empathy. The events of this week may have set the stage for a big rise in Tesla's stock in the coming weeks and months. Get a cup of coffee, settle down, and get ready to learn a lot about Tesla's great week. Everything that happens today could be a sign of how the market will move tomorrow. To show your support, though, please like this video and sign up for Tesla Stock News. Allow us to begin. First, many people think that Tesla stock will reach $420 once more in the next 6 months. Right now, that's a big deal. What's the big deal? Well, Tesla will be putting out their earnings report in July. People are all waiting to see those arrival numbers. The stock could go through the roof if they're good. The Tesla team is also very excited about some new projects they're working on, such as making more money and making cool new goods. It's a lot like waiting for the next big movie to come out, but for stocks. Now we'll talk about something called Event 88. Your ears are all tuned in for this one. What does Tesla plan to do with these self-driving cars they've been talking about? The details are very important here. How are they going to make money, and when can we actually call these future taxes? If this is made clear, Tesla's stock could really go up. Then there's the big picture. Tesla is no longer just about cars. They're talking about how self-driving cars are getting better, robots that could be on the market soon, and some secret new items that could make them a lot of money. But I have to tell you, the market is pretty tense right now. It's careful, but hey, this could be a huge chance if you believe in Tesla's future. Many people are calling what's happening to Tesla negative noise, which is making its stock price go down. On the other hand, Nvidia is seeing big revenue gains thanks to its AI advances. The market as a whole hasn't fully lined up yet. In the same way, Microsoft's income has gone up a lot thanks to its AI projects, such as its partnerships with companies like OpenAI. This difference in how the markets reacted shows that Tesla is facing a volatile area with a number of problems right now. Elon Musk has made a big announcement by revealing his plans for Master Plan Part 4. A new compensation plan is likely to go hand in hand with this strategic effort, which will focus on robotics progress and set the lofty goal of reaching a $25 trillion market cap. At the same time, Tesla's Model 3 long range can now get a $7,500 government tax credit. This makes it easier for people to buy and could increase sales and profits. Tesla's latest price changes also show an interesting strategy that could affect how well its stock does. These price cuts might lead to more production and supplies. Improving the buying experience for customers is also likely to have a positive effect on the company's sales and profit margins. Elon Musk has hinted that the reveal of a new Tesla car could happen in either the first or last quarter of the year, which could cause a big change in the stock price. We've got some new products that we're working on under the covers, and I think these are going to be pretty special, he said. Some of them may initially seem underwhelming, but just wait, it will be worth it. This news, along with possible new relationships and the use of fully self-driving technology, could cause big changes in how investors feel and the value of the stock. These events give us a full picture of Tesla's future plans and how they might affect the company's finances and place in the market. Recently, Tesla's stock has done well thanks to a number of risky partnerships and a big change in how the market feels. There is more and more talk that Tesla is about to change the transportation business even more, which is a big reason why investors are so excited. A positive change in mood was also seen after it was claimed that Ford planned to buy Tesla cars, which helped the stock rise even more. Many investors may not be giving Tesla enough credit for how big of an impact it could have in the energy field. The company has decided to wait to show off all of its energy market capabilities until it thinks the time is right. The goal of this strategy is to make sure that Tesla can keep its promises in a fast and effective way, which will keep and grow investor and customer trust. Ford seems like a good choice to use Tesla's full self-driving system when it comes to autonomous driving technologies. This rumor is strengthened by the fact that Ford CEO Jim Farley wants to adopt the North American charging standard. This marks a major change in how the industry thinks about the infrastructure for electric vehicles. Also, a third-party collaborator is expected to make a statement soon about improvements in FSD technology. This could happen as early to mid next year. This new information could have a big effect on how quickly self-driving cars are adopted in the business. Investors and experts have talked a lot about what might happen if Elon Musk quits Tesla. Tesla's stock price has been going up and down because people are worried about Musk's big pay deal and his possible departure. But Musk's track record as a wartime CEO, especially when it comes to leading the company through tough times, has given investors some peace of mind, which has led to a small rise in the stock's value. In addition, Tesla is dealing with slower growth and more financial stress right now. The company's sales and profit rates are going down because the economy as a whole is slowing down and people are being more careful. But there is a small chance that Tesla's financial picture will become more positive again if interest rates go down. This could lead to more spending by consumers, which would improve Tesla's market performance. Tesla is changing from making cars to being a star in robotics and AI technology. The company's story of growth and change is especially interesting at this point. This change makes a big difference in how Tesla does business and where it stands in the market. At first, the market might not fully understand Tesla's progress in the energy and car industries. However, the company's strategy shift toward robotics and AI will have huge effects on the future of the company. A lot of people are interested in the latest legal developments involving Tesla. These developments show how complicated the relationships are between legal results and corporate finance. At the heart of these events is the hope that a major court decision will be confirmed, which could give lawyers an amazing $2.5 billion. A retired judge from the Delaware court voiced strong confidence in the judgment's validity, which supports this expectation and shows that it might stand up to appeals or other challenges. There is also ongoing talk about the potential of going back to the original deal that was being looked at by the courts. Analysts are keeping a close eye on this situation and think that if the deal is revived, it will probably only have a small effect on the price of Tesla's shares. Investors may have already changed their expectations based on what they think will happen in this case because of this expected stability. This court situation shows how complicated the legal and financial issues are that Tesla has to deal with as it continues to grow its business. How well the company handles and responds to such major legal challenges not only affects its current financial situation, but it also shapes its image and long-term positioning in the tech and auto industries, which are becoming more competitive and closely watched. This case is a great example of how important legal results can have a big impact on big business decisions and how investors see them. When it comes to infrastructure, Tesla is at a turning point in terms of how well and how quickly its network can grow. The goal is to improve performance without slowing things down with too much red tape by using quality assurance (QA) methods effectively. When using this method, many legal issues that might affect how Tesla's services are used in different areas need to be carefully thought through. There are also ongoing talks about how to roll out Tesla's network growth, how to maintain vehicles, at how to make charging stations work. These things are very important for keeping Tesla's growing infrastructure reliable and efficient, which is needed to support its growing customer base and technology projects. Tesla is currently in a holding pattern while it waits for a settlement that will affect how it runs its business and how it pays its employees in the future. The business is going to move to Texas and will be giving Elon Musk 25% power through dual-class shares. While this big change is happening, a new pay plan for Musk is being deliberately put off. The choice to put this plan on hold was made strategically so that ongoing legal matters don't get more complicated and the public's opinion stays positive during this time of change.